This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi everyone, Mathis Connor here with Connor Management Group, and this week we're going to look at the best small cap stock to buy right now. Today is Monday, September 15th, 2014. And for this company is in the steel and iron industry, and we see its 6-month upside potential at 50.8%. We usually do 12 months, but with this being a small cap stock and volatility typically being a little higher, we're taking a 6-month time horizon, and I think most people appreciate an analysis that's often sooner rather than later at any rate. So at any rate, we have a stock here. We see its 6-month upside potential at 50.8%. Going on to the next slide, and we see that the name of this small cap stock is called Commercial Metals. The ticker symbol is CMC. The industry, once again, steel and iron, and we see the 6-month upside potential at 50.8%. On to the quick facts slide. Here's the business summary description for Commercial Metals. Commercial Metals Company manufactures, recycles, and markets steel and metal products and related materials and services in the United States and internationally. Company's Americas Recycling segment processes scrap metals for use as raw materials by manufacturers of new metal products through 31 scrap metal processing facilities to steel mills and foundries, aluminum sheet and ingot manufacturers, brass and bronze ingot makers, copper refineries and mills, secondary lead smelters, specialty steel mills, high temperature alloy manufacturers, and other consumers. That was, that was the company's Americas Recycling segment. Now for its Americas Mills segment, the Americas Mills segment operates 5 steel mills that produces reinforcing bars, angles, flat rounds, small beams, fence post sections, and other shapes. They have 2 scrap metal shredder and processing facilities and a railroad salvage company. So I think that gives you a feel for what Commercial Metals do. Basically, they have a recycling division, a steel mills division, melts all the metals and stuff, and they also have a metal fabrication business that makes a lot of rebar and other steel products. They essentially have 3 manufacturing divisions. Technically, they have another division as well, their marketing and distribution arm. The website for Commercial Metals is www.cmc.com. The company is headquartered in Irving, Texas. They were founded in 1915. The number of employees they have stand at 9,411. Their ticker symbol, once again, is CMC. The sector they operate out of is basic materials, and the industry is steel and iron. Now, this is a small cap company. Now, I preface that because their annual revenue stands at $6.8 billion. And just so you know, the definition for a small cap company are companies with a market capitalization, the value of all the stocks, between $250 million and $2 billion. And this company just falls within that size definition at $2.1 billion. So the annual revenues for Commercial Metals over the last 12 months was $6.8 billion, still a small cap company. The net income over the last 12 months was $71 million, and the cash from operations was $199 million. So you can imagine these are pretty thin margins based on revenues of $6.8 billion and net income of $71 million. And the market capitalization now stands at $2.1 billion. On to the next slide. We have the products and services page, and on this slide we have the Commercial Metals logo, and we have a number of slides from one of the recent investor presentations. One of the top photos here is they show their metals recycling division, the mill products, which we described, and the fabrication products, which we described, making a lot of rebar and steel products, and also their marketing and distribution arm, which operates worldwide. In addition, interesting slide here is they show the breakdown of where the revenues are sourced from for 2013, and basically in North and South America in 2013, their revenues totaled $5.9 billion. The revenues out of Europe totaled $1 billion, and then the revenues out of Asia Pacific region totaled $0.9 billion. So most of their revenue comes from the Americas, then Europe, and then Asia. And the revenues in the Americas is really split fairly evenly between their recycling segment, their mill segment, the manufacturing segment, and their marketing and distribution arm. You could say roughly those are 25% of the $5.9 billion. So Commercial Metals, we think this is pretty interesting because of the way they integrated. I mean, when they started out, they were primarily a metals recycling company, but over the years, they've evolved to have their own mills, and right now 40% of the metals that they gather for recycling is actually used in their own mills, and then their mills are then used to manufacture a lot of metal products for themselves to sell, as well as to others. And another slide here also shows that in the United States, a lot of Commercial Metals operations are in high construction areas of the United States. So Commercial Metals has a lot of operations in Texas as well as California, and those also happen to be the areas of some of the greatest amount of construction going on right now in the country. So we think that is helping to poise it for near-term growth. And additionally, we have another slide that shows a worldwide map and how they're sourcing and shipping different metal materials to different parts of the world. So that's what we have for the products and services slide. On to the metrics slide. Once again, the annual revenue of the last 12 months for Commercial Metals stands at $6.8 billion. The net income was $71 million over the last 12 months, and the cash from operations was $199 million. Now, the operating margins for 2013 were 4.8%, and for 2014, they're tracking to be 5%. So that's effectively kind of flat in my book. The trailing PE ratio right now stands at 29.6, and the forward PE ratio stands at 14.7. So for these two valuation metrics, that tells you that stock analysts expect their earnings to increase quite a bit. So that's a change from 29.6 to 14.7. The PEG ratio stands at 1.2. That's not much greater than 1. That's good to see. The price to sales ratio is at 0.3. That's a low number in anybody's book. And the price to book ratio is at 1.6. Also definitely on the low side. The enterprise value to EBITDA is at 8.8. The recent closing price for Commercial Metals was $17.47. The 52-week low was $16.05, and the 52-week high was $21.20. So the stock is closer to its 52-week low than its high. The 200-day moving average is now $17.52. The 50-day moving average is at $17.50, and the 200-day moving average is at $18.70. That relationship tells you that the stock hasn't moved much lately, and it's actually just declined a little bit from prior highs. The average daily trading volume for commercial metals stands at 842,000 shares per day. That's a decent trading volume, not heavily traded, but decent. The beta for the stock's at 2.1, so the stock is a bit volatile. More, it goes up more when the market goes up, and it goes down more when the market goes down, with a beta of 2.1. The dividend yield stands at 2.8%. So right now, the stock does pay a decent dividend, that's for sure. And the average dividend payout ratio over the last 3 years was 64.3%. Now going on to the price chart for CMC, we see, over the past year, CMC has gone up 7.4% over the past year, and we think it is now poised to go up about 50%, as we stated in the opening slide. About a year ago, the stock was around $16, and it increased up to around $20 and a half dollars, and let's see, around January of 2014. So the stock had a rapid increase, and the reason for that increase was because they had a very strong earnings beat, and they also sold a metal subsidiary company. So the stock had made a nice strong advance in the first third of a year ago. Since then, the stock has pulled back a bit from the high of around 20 and a half. The stock's pulled down, plateaued and pulled down a little bit to around $19 in May, and then it pulled down to around the $17.50 range here in September. And the reason for those pullbacks, there were a couple things that happened, but particularly in May, they had a significant earnings miss. They missed their earnings by about 33%, so that gave a lot of investors pause and some concern. Additionally, their recycling and fabrication business in North and South America was struggling a bit, although this was offset by gains in their mills and fabrication divisions, but additionally they experienced just some softness from international markets. So bottom line, the stock's pulled back from its high in the January time frame. It's still up about 7% over the past year, but because of just other positive factors and favorable outlooks in their milling and their fabrication divisions, and the gains expected just domestically from ongoing construction, we think that the stock is poised to break out over the next 6 months. So on to the summary slide. Basically, the financial statement quality for commercial metals is quite good. The financial statement quality is good. The dividend is just under 3%. So actually, when you combine the 3% dividend with the 7% gain, you'd have an all-in return of about 10% over the past year, which is not terrible at all. So the financial statement quality is good. The operating margin trend is flat. The price pattern trend is, we'd say, effectively flat. It's up. It was up about 7% over the past year. And our market outlook is neutral. We see a few undervalued names and a few overvalued names, but we don't expect there to be any headwinds pushing one way or the other right now. So, the recent closing price, once again, is at $17.47, and our 6-month target price is $26.35. So the 6-month upside potential for commercial metals we see at 50.8%. So we see commercial metals as the best small cap stock to buy right now. We hope you enjoyed the presentation, and we'll talk to you soon. Take care. Bye. Hi, this is Mathis from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes. And for you guys on YouTube, I'd appreciate thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why this stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also in mechanical engineering, and I have an MBA in finance from the University of Chicago. So hey, that takes care of my educational background. Basically, bottom line is to see, I did a lot of schooling. What my career experience has been to date. I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA, and basically I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager. And basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things will be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, say, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Content Management Group and the development of all of these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. the premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Content Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to ConnorMG.com. That's www.connormg.com, or you can go to our website and you can see a presentation that compares Content Management Group side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trades, the minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size is probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, let's see. Additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast of our thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers 2 newsletters, both weekly, 2 weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to CMG stockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.